Hey, Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. Let's continue our conversation that we had yesterday and let's move it forward. As a review, yesterday we talked about R. We talked about 1R and defining what 1R means to you. Now, for me, 1R means 20 ticks. When I first started trying to figure out this market, I went back and I said, what's that pain threshold? What level do I not want to exceed as far as one particular trade per contract? 20 ticks was what came in. So in other words, $200 or 20 ticks. And in the crude oil market, just so you understand, that would be the difference. Let's say if it was trading right now, currently it's trading at now roughly 5,500. So 5500 or $55 a barrel. So if I was short the market at 5,500 and it would move to 55.20, in other words, it would move 20 cents against me, that would make a loss of $200. Hopefully you understand. $10 a tick, so 200 in each 10 ticks is $100. Now, let's move on. Now, the second component that I think you need to understand is the P side. P stands for profit. So I call it R versus P. Now, when I'm calculating out my spreadsheet, oh, by the way, let me pull this back up here again, see if I can get, actually, I'll just read it to you on page 88. It says, for example, most good traders believe that they should never take a trade unless it gives them a potential reward that is at least 3 times the size of their potential risk. 3R. So 3R. And I had a question the other day about, why do I go after a specific target? Once again, that's coming from Trade Your Way to Financial Freedom from Van K. Tharp, second edition, page 88. So page 87, page 88. Now what I did is I took Van K. Tharp, or Tharp, so I just call him Dr. Tharp. I took his information on R, and then I made an R. Hopefully we can bring that R, and then let me see if I can get that to work out right. R for risk, P for profit, right? Now you'll see that 12.25%. Hopefully you can see that, 12.25%. So if you think about it another way, if 1R is 20 ticks, would you want to risk 20 ticks to get 20 ticks? So in other words, a 1-to-1. What he's saying is you should go, if 3R is the target, then 3R is if 1R is the multiple of 20, so 20 times 3 is 60, right? 60 ticks. In that case, 600. 600 versus 200. Now, what I did is I determined what I thought you as a day trader should earn on that. So you need, if you just got one out, if you just got 1-to-1, you still want to get, so in other words, a risk to reward 1-to-1. You need to get a little bit more on that risk side than you're willing, on the profit side than you want to get on the risk side. So if you're willing to risk 20 ticks, you should be minimally going after 22 to 23 ticks. You following me? So if you would take 20 and times that by 1.125, let's go over that math again. Take your calculator out, right? And you would take 20 times, let me just do it here. 20 20 times 1.125. Let's see if I can get that in there right. Tell it clear. 1.125. And say equals, you get 2250. So what I'm telling you is that 3P target, and if you take that times 3, just basically looking at it, instead of going after 60 ticks, you should be going after 67 to 68 ticks based upon that particular R. And each market is different. You got to determine how much that average range moves, I determined the 12.25% or 12.5. So 12.5, 12.25. Whatever you want to go with that, 12.5 works just fine, or 12.25, whichever one you want to go at that. So I gave you the example of 1.125 today. So hopefully that helps you. Hopefully I didn't confuse you too much. So let's summarize here. So R versus P, and you're going after a 3R target, a 3R target against the 1, so 60 to 20, right? But I say that you should figure out what the average range is, and if 1R is 20, then you should go after, say, 22 to 23 ticks on the P side. So on the profit side, right? So in other words, 67 to 68 ticks. Now we will work on other concepts so that you can understand average daily range and a lot of the other things that I do. But I wanted to get this concept down. I wanted to hammer it a little bit. So we have the R, now we have the P. So R, and then we have R versus P, right? So hopefully that makes some sense. That's it. Dave Knight here from 123daytrade.com. Thanks for watching. Thanks for being here. If I can answer any questions, just feel free to make a comment down below. We'll answer them. As long as you stay positive, we'll answer them. I'll answer them. So that's it. That's all I got for now. God bless. Take care. I'll see you on the next video I put together. Bye for now.